Hey, it's Neil Tipton with Waterstone Mortgage, and today I'd like to discuss the different types of lenders and the pros and cons of each. This video is a little longer than normal, but hang in there as it's an extremely important factor when choosing who to work with. In no particular order, we first have mortgage brokers. They used to be more prevalent prior to the passage of the Dodd-Frank Act following the Great Recession, after which it became really difficult to just be in compliance with federal regulations. Anyway, mortgage brokers are small independent companies that place loans among one or more wholesale lenders with whom they have relationships. This setup of outsourcing underwriting, appraisals, and closing helps keep costs low, but it requires them to relinquish all control. Because they aren't lending their own money, they also don't get to make the decision on whether to approve or deny a loan application. As you can imagine, it also has the potential for a much brockier process with missed closing dates for the same reason. Next, we have non-bank lenders that do everything in-house but rely upon a warehouse line of credit in order to lend. When a loan closes, they send a wire using borrowed funds from their warehouse line of credit and then pay it back down once the loan is sold to an investor. While this setup allows them to regain control of the entire process, it can also put them in a precarious situation should their investor get spooked about the market and suspend or terminate that warehouse line of credit. If that happens, they've got no money to lend, so they're effectively out of business immediately, and it's typically without warning. Traditionally, this happens after reporting 2 consecutive quarters of losses. Many companies operated at a loss in the first quarter of 2022, and the second quarter was even worse with the continued rise in interest rates. That's why many industry experts expect a wave of mergers and acquisitions early this fall once the next round of earnings are released. Lastly, we have bank lenders and credit unions. They're just like independent non-bank lenders, except they aren't reliant on warehouse lines of credit as they lend their customers deposits. While they control everything soup to nuts, mortgages just aren't typically their forte. They simply offer them to retain their current account holders or in the hopes of gaining access to a borrower's deposits. They hire untrained clerks that sit in huge call centers during regular business hours, so service levels and the overall process definitely suffers. They're also known for having tighter underwriting guidelines, so don't count on them offering creative financing or lending to borrowers with less than perfect credit. Waterstone Mortgage is extremely unique in that we operate like an independent non-bank lender with the security of a bank lender. We have control over the entire process from beginning to end, and our warehouse line of credit is provided by Waterstone Bank, who owns us. Because they have a vested interest in our success, we don't have the same risk of our warehouse line of credit being cut off. And for those rare scenarios we don't offer in-house, we also have the ability to broker, that we do try our best to avoid. We truly offer our realtors and clients the best of all worlds, so make the easy decision and call us today at 301-893-1200. Thanks for watching.